Well, thank you very much, Mr. Akita. That was really very useful into helping us to set the scene and, I guess, demystify a little bit about the public and private sectors and how they have maybe merged and got closer and closer over the last 3 to 5 years. And I think that's a lot of what we would like to talk about here is the collaboration and capacity for innovation between the two sectors and maybe those in the middle. So rather than go through each panelist's name and title and probably do a disservice to it, I'll ask them to introduce themselves when they come around to their first questions. And to start that, I think we want to have a little conversation, if possible, between a number of the panelists about the ways they are currently and can collaborate over the coming years. DFIs, insurers, and ECAs share risks, and they can do that in many different places. It's, I would suggest, much easier, clearly, for private sector counterparties to finance more seasoned infrastructure in more developed nations, but that's not often why we're here, and that's certainly not why my panelists are here. So how can the DFIs, MDBs, official commercial insurers, and other ECAs support greenfield infrastructure in more frontier jurisdictions, and how can they really advance that development, maybe where the private sector is not able to as yet go? So maybe if I could ask that to President Tadesse to start with, and we can maybe go around the panel and have some comments on that. So over to you, Masu.
Thank you very much, and good morning to everybody. Excellent scene setter with the Burn Union presentation. Thank you for that. Just very quickly, TDB is a trade and development bank or a group. We cover about 26 countries in all the 5 regions of the continent, including Ghana, Senegal, and Angola these days as well. And we, of course, have the T as the first letter in our name, so trade finance and related ECA finance is also something that we do a great deal of. The topic, the question around partnership and synergy between the two different groups of financiers is something that we do a great deal of. I think we, as multilateral development banks, have always seen ECA tranches in various types of projects. We, as some MDBs, actually intermediate some of that ECA finance as ECA partners ourselves, and we as TDB are one of those types of MDBs that do a great deal of that. And it's gone very well for us, and we of course, are very pleased to see that the industry landscape is also changing. It's becoming much more dynamic. We're even seeing the OECD adjust some of its rules to allow for longer tenors in the green financing space in particular. We're very active in that particular segment, financing, so we're quite happy to see the tenors going much longer than what they have been in the past. We see equivalents of grace periods also being added to cover the construction period. So there's some very interesting developments that is actually setting the stage for more scaling up in the spirit of the title of the session. I think the other interesting developments is the way in which some ECAs are doing more untied business, and we have tested that, and we've done some very good transactions with some of the colleagues on the panel, actually 2 of them, and that's again, created a lot more room to maneuver, to sort of move beyond the just simple transaction by transaction basis, but to actually have a bit more upfront scale to give you the confidence to go out and promote and build capacity, including, of course, matchmaking events and the like. So I think this whole development on the untied side of things is very interesting for the African continent, and we think that will set the stage for more concerted efforts. But beyond ECAs, I think the interesting presentation that kicked off the session this morning had talked a lot about how the insurance industry more broadly has played an important role in helping to unlock private finance and help with the diversification and risk sharing side of things. We've been a very active user of the insurance industry. And I think where trade finance is concerned, the insurance industry has been very willing to come in and share risk with us. And we as TDB have almost 1/3 of our trade finance portfolio is credit enhanced. And it's been a great great engagement for us. But I think there's some, less optimistic trends as well. I've talked about a lot of positivities, but I think, there have been some cases now where trade finance is being included in debt restructuring issues, and that is sending shockwaves into the trade finance industry. And I think the insurance industry is also reading a lot into that, and there's a lot of big questions that are being raised around, governance, the global level, around how trade finance is being, unduly inserted into debt restructurings. And if we're not careful, I think as a global community, we're going to see that asset class really withdraw systemically, because we all expect the rules to be upheld. And when the insurance companies come in and get involved in the trade finance space, they expect that asset class to be treated as such. So there's been some unfortunate negative developments in that regard. Hopefully the stakeholders globally will pay much more attention to that. But other than that, I think with the big drive to boost economic development, we are seeing ECAs come in in a much stronger way, because of course development finance and ODA is no longer available in the same way it has been. And so I think there is a very exciting opportunity for ECAs to scale up. And so we look forward to doing more of that. Thank you.
That's great. Thank you so much. Manuel, if I can come to you over there, far across the stage. How do you see the role of a TD in respect of, I guess, what are often transactions where you're asked to take risk in jurisdictions where, member country jurisdictions where greenfield infrastructure financing is integral to the development of the nation, but maybe private sector is not there yet? How do a TD to look at those transactions, and where do you see your value add in that space?
Okay, good morning, and thank you, Simon, for that question. So my name is Manuel, the CEO of ATD. ATD is a political risk and credit insurer covering now 24 countries in East and Southern Africa and also in West Africa, and with an ambition to cover all African countries. How do we operate? We operate by providing credit and political risk insurance so that we can crowd in private sector finance, either it's FDI or trade finance, into our countries. And just to focus on the theme of this whole forum is to say, how can we really crowd in the partnerships to scale up? We are a typical example of that. If you look at our shareholding, mostly owned by governments, but also owned by ECAs and development banks, including some of them who are on the panel, like TDB, African Development Bank, and with a mission basically to see how to crowd in private capital into frontier markets and also into the more developed markets. So the way we see ourselves in frontier markets, as asked by Simon, is definitely investors in this room would perceive that it's difficult to go into a country that they've got no data, no record of payment history, etc., etc. So what we have done, because we do know some of these countries, we have come in the middle and say, okay, fine, we will insure you, investor, to go into this country. Should things go wrong, we will bail you out. So that's the basic promise of what we're doing. And it's not just theory, we're actually doing it in practice. So I'll give an example. For example, what we are doing in countries like Burundi, Malawi, where we are introducing investments or investors into these countries that they would never have done without our support. So we're really pushing the envelope. But how do we do it? We do it because of the partners around this table. We go to an ECA and we say, listen, can you do, before it was 85%, now it's slightly higher as mentioned. But if you can do that part, we are happy to also cover the remaining part with the commercial tranche so that the project can happen. So indeed, our history has shown that actually is just a perception of risk, but the reality of risk is actually much lower. And we hope that these investors will get a good experience, will not get claims. So far, we haven't gotten any claims in these frontier markets, actually confirming that the perception is higher than the reality of risk. We've gone one more step and saying, okay, so say in the energy space, and I'll speak about it maybe later on, we've also done a transparency tool where we are trying to actually show the data of payment records in these frontier markets so that investors actually, when they do the next project, they have an ability to see data that is verifiable by us, by the country, that actually the payment history is not as bad as they thought. So hopefully with that data, they can make better decisions. They can make their risk premium lower than that they would have done in their first transaction. Our hope is that one day we will not be needed to give that type of comfort to investors so that they can actually go in and do these projects in these frontier countries. So really that's our promise, that's our value addition, and this can is only made possible because of partnership. We have partners on this table, reinsurers are here, ECAs are here, and ourselves, we could not achieve this without the partnership. So definitely the theme is to do more in the continent, we need to work together.
Well, that's great. Thank you very much there. Mikhail, I can see you leaning forward, and you've already been warmed up here by President Tarase saying that there's been some collaboration. Maybe you could talk through some of the statistics and experience and exposures that Saatchi have on the continent and in certain places.
Thank you. It's on. All right, thank you. Thank you, Simon. I'm Mikhail Ron. I'm the Chief International Business Officer at SACE, the Italian Export Credit Agency. Actually, we call ourselves nowadays a financial institution because it's both export and import. I recognize a lot of if you want, the trends already highlighted previously by President Tedesse, but also by Manuel Moses, CEO of ATD. Effectively, we have two major criteria for entering into frontier markets. The first, and it seems to work very well for us, is the physical presence on the territory. So we currently have 3 offices in the African continent. The first was Cairo, that deals with not just Egypt, but the northeastern region. The other one is in South Africa, in Johannesburg, that covers the whole region from center to south. And now we have just opened, actually 3 weeks ago, another office here in Rabat. So we have our 15th office overseas, now focusing on both Morocco but also West Africa. And the presence in the field is absolutely essential in order to recognize the very specific needs, and every country here is different. I'm often tired and a little bit disappointed to hear the generalization of Africa, because it's not one size fits all. It's extremely fragmented. It has very different needs from country to country. And being on the ground helps us identify the exact financial needs, but also infrastructure and other needs. And we see them earlier than when those who do it remote can possibly achieve. The other main issue really for us in terms of nourishing this rapport with African countries is the partnerships that we have founded. Some of them are partnerships that we support through a guarantee. And this is indeed the case of the Untied. We can talk about it later. Our program is known. It's called the PUSH strategy. But I can tell you that starting from last year, we've actually created a new variant of the Untied financing that is addressed specifically at multilaterals. And this has enabled us to enter into many other frontier markets in the African continent through our loans that are guaranteed clearly by SACE that have been addressed specifically to development banks in Africa. So with the African, with mentioning obviously a TDB, that was our first push strategy with the multilateral here in the continent, but also others. AFC is another one, and we have quite a pipeline now of other to come. This allows us obviously a much better network and distribution channel, especially since what we're doing is bringing over procurement with specific, if you want, addressing specifically the needs of these greenfield projects. So we bring the whole supply chain. We conduct this, if you want, work of matchmaking, and it is the core, if you want, principle of this untied financing. So the local partnerships, we also have a very long-standing partnership with ATD here. We are on the board of directors since many years. I've been myself 7 years with them. We are obviously a shareholder, so we believe in these partnerships. And today we've signed another agreement with the African Development Bank, extremely important, and it is effectively a derivative of the Italian government's plan called Piano Mattei, the Mattei plan, and the goal is to combine both products and increase the financial capacity on the African markets with 9 countries that have been identified to start with this year, and next year there will be an incremental, if you want, additionality of other countries. So most of these are frontier markets, just to be clear. Last but not least, we are also providing untied finance to ministries of finance. So this enables us to enter into countries that the private sector currently doesn't cover properly or is timid, let's say, in its passes. But just to name a few, Senegal, Benin, Côte d'Ivoire are all countries where we provided our guarantee for untied finance that then goes into major infrastructure, ESG projects, and water, to name just a few sectors. Thanks.
Thank you very much. A very comprehensive update there on Saatchi. That's great. And Haytham, over to you if you don't mind at the end there. You really are far away. Maybe you could talk through, I mean, Afrexim is import and export. It's interesting to understand how the bank its portfolio has grown, expanded, and where you see your role with respect to these more challenging jurisdictions as a bank and on the continent.
Okay, thank you very much. Let me introduce myself first. My name is Haytham El-Maiergi. I'm Executive Vice President for Afrexim Bank, heading the Global Trade Bank within Afrexim Bank. And it's a very interesting topic because we're very active in this space. We have relationship with almost all of the ECAs funds being a major player on the continent. And the whole idea that we're seeing, and I'll offer a different perspective in terms of there is an interesting phenomena where you find in one hand ECA and funds trying to find home on the continent, and it's not easy because they're trying to find the right transactions. But on the other side, there is a lot of people on the other side waiting to do funding, and they cannot get this. And I think we need to rethink the model because Africa is not a savvy user of these funds yet. But if we really rethink the model, we can really do much more. Definitely, at the bank, we do a lot of innovation around it, and I'll speak about it later. We're repacking, blending, everything. But the idea now, if you look at here, is that one, it's a piece on how can we get the customer, the end project, to visit the doctor early. Like if you visit the doctor early, you will be preventing a lot of things. Instead of conceptualizing your project and then trying to find finance and then find it expensive and try to fit it in an ECA suit, go early, structure it correctly, find the right discussion with you and the multilateral, cover the right risks, even cover the risks outside of our projects, off-take payment risk or whatever, and make it ready. But on the other side, I think the ECAs, the global banks, the multilaterals need to start to offer the service as they say, cradle to grave, end to end, from offering the full thing, from working capital finance, project preparation, financing your trades, the project finance itself, and package it in a way. But at the same time, also ECAs and funds need to relook the way they look at the content in terms of conditions, because sometimes what applies to one continent will not apply. And I know there's a lot of customization, but I know there's a lot of discussion on how the projects can fit and finding a project that really can fit in the frame of the ECA. So it's a big part of you as a project owner and the other side. Us in the middle, we're doing a lot of work. Like we're doing a lot of re-guaranteeing, where some of the ECAs are more comfortable on lending to us. We lend there to they put an investment grade risk on top of what they do. There is a lot of de-risking that we're doing across, but I think if we get this equation between both, it will be a better matching, as we say, because this is what we see happening. This is what we see, a lot of funds waiting to go into the continent, but at the same time, a lot of projects are not getting those funds because of the matching issue. And we've been in a large number of transactions where we collaborated nicely with the multinational banks because of their funding, us taking the risk of the continent. We know we have 53 members, 53 countries of this continent that we cover, which is almost all of the continent, and at the same time getting the ECA on it. So basically, this is the topic that we really need to rethink in such a forum. Thank you.
No, thank you. I like the analogy of visiting the doctor early. That's definitely a good takeaway. And we get to next visit the engineer, which is Mr. Hani Sombol. So over to you. I'm going to ask you, infrastructure financing needs to be considered in respect of both climate mitigation and adaptation goals. How does ICD look at projects to ensure resilience of these projects with respect to climate shocks?
Thank you very much. Good morning, everyone. My name is Hani Sombol. I represent the Islamic Development Bank Group, a very unique South organization. It has 5 entities: the ISFD, which is the research and training, and also ITFC is the trade arm of the bank. ICD is the private sector arm, and we have also ISEC, which is the insurance corporation, and finally the Solidarity Fund to reduce poverty. These 5 institutions, they are all, of course, work under the umbrella of the group. I am honored actually to also be the chief of ITFC and also acting chief of the ICD. I was also the acting chief of ISEC. So I think I have this kind of a unique, maybe, a combination of experience over 40 years in the Islamic Development Bank. Of course, before we start focusing on that, we have this climate change as really at the top of the priorities of the bank. Each entity has its own, of course, mandate. However, we all have the same aim, is to really support member countries' development plans and also make sure that we are part of the economic development of our member countries. And definitely climate change comes at the top. And that's why now we see the group is actually preparing very well for this, not from today, but we started earlier since this became an issue globally. We started by preparing also internally, to face all of these issues related to climate change. We started to prepare the ESGs and policies, train our staff, get involved really globally with our really expertise to really contribute really to also to the climate change issues. In addition to that, of course, when you spoke about the SDG, Your Excellency, this morning, of course, the group is really committed also to achieve the SDGs goal. Going back to your questions related to how really we can, combine or integrate, align the climate change mitigations and to adaptations goals, I think institutions cannot really avoid that to go into the future. Of course, the infrastructure's financing can also be effectively aligned when you are already prepared in terms of really the design and the financial, financial engineering within each institution to ensure that projects' resilience to climate change are actually, taken care of, and also to contribute globally to the sustainable development. I think the following are maybe a number of points that can be added, to enrich this subject, that we need to also look into how to look at the climate risk assessment and resilience standards. And that's very important. It became now, it's part of our regulations is to look into that. We also have been looking at the blended finance and become more into green bonds as well. As you know that the group also allocates a percentage of its financing toward really achieving this. And it's increasing every year, contributing to whatever really develop the green financing or the green sukuk in Islamic terms. And that's why we are very much committed to see that also happens. These institutions, whether it is DFIs or ECAs, or we can see now utilizing the blended finance to mobilize private sector also, or capital to finance projects. And this blended finance models often involve combination of concessional financing sometimes, credit guarantee, risk-sharing agreement, and so on. I think that will be, of course, a point that already recognized by the group. Thirdly, the integration of climate shocks in risk analysis today. You cannot avoid that. Despite the differences among the 57 member countries that we operate in, okay, we need to really make sure that some countries, they do have different climate shocks than others due to the location, due to the type of topographies and others. And also we can see that we need to be very well prepared when we are really financing infrastructure projects. Just imagine what happened to Pakistan, the flooding, and definitely many of the infrastructure projects were impacted. Definitely the integration of these climate change into the assessment process and the risk is very, very important. I can recall many other member countries who have faced really issues and I would say were impacted heavily by for example, by floods and rains, and they have the main sectors impacted were the agricultural sector, and that's most of our member countries, at least 60% of their populations work in agriculture. We need also to support for local content and capacity development. Training and capacity development are very important. So I think partnership between the DFIs, insurers, ECAs, and also whoever is really working in this field should really focus also providing instead of financing. I always repeat that financing alone is not going to be enough. We need to really have these integrated solutions part of really our offering. And that's why we have each institution offers either technical assistance or very special programs, flagship programs, to train the ones who are going to be involved in financing infrastructure projects in our member countries. And then finally, of course, we look at the innovative of financial instruments. I think that's what we are trying to achieve. Today, we cannot really rely heavily on our traditional offerings in the past. During the 70s, member countries offered or demands were different from today. This because of the change of the issues that the world is really facing. And I think that is going to be very important for institutions to be sustainable in the future, to really be very innovative in the offerings and the instruments. For example, we try as much as we can now to develop these innovative system financing within ICD, within ITFC, within the bank itself, to keep up really with this. And of course, the increasing availability of risk-sharing instruments, as we spoke this morning, such as the political risk insurance. You know that ISIC is part of also these efforts, and also related to other issues like the currency coverage or the currency risk change coverage. That is another area. And also the credit enhancement guarantees, which is further supports our climate resilience projects by de-risking them for investors. How would you like to really invite an private sector or mobilize private capital without really ensuring that you have all of these taken care of? I stop here. Thank you very much.
No, thank you. That's great. Well, I'm 1.5 questions in, and we're halfway through. So I'm feeling bad for Leela and Heike in the middle there, as I've not had as yet the opportunity to talk to you. Now, Manuel, I was going to come to you, but if you don't mind, I'm just going to hold off and come back to you in a minute to talk about some of the innovative products that a TD have. Instead, I'm going to go to Leela and Heike. I promise it's straight after that. I've sat on a panel before where I sat there for 30 minutes and no one talked to me, so it's not fun. And I make sure I will come to you. There's definitely a, how would you say? There's a friction potentially between the fact that both DFIs, MDBs, and ECAs are very clearly have the role of crowding in private sector, financing infrastructure transactions, bringing support from that private sector. But there is a concern sometimes in the commercial sector that potentially crowds out some of the private sector insurance market, who are often utilized as participants through the MDBs, ECAs, to support those financings that the public community are putting in place. How could you talk about how you see, as an underwriter, the crowding in of your capacity versus the crowding out that maybe you hear from some of your other clients when they talk to you about transactions?
Thanks, Simon. By way of introduction, I'm Leela Granda. I'm the head of political risk and credit at Vantage Risk, and we're a private sector insurance company based out of the United States. We offer up to between 40 and 50 million, up to 40 and 50 million dollars in limit per transaction, depending on the underlying product, and we can offer up to 10 to 20 years of policy period or tenor, depending again on the product. So I think we're very well positioned to support a lot of the transactions that we're hearing about in the African continent. And to your question, Simon, I'm really not seeing the crowding out, I'm seeing the crowding in. We work actively with every single institution represented on this panel, and that's really part of our strategy. Manuel talked earlier about the risk perception, and the private sector timidity was something that Mikhail mentioned. I'm not going to say that we're timid, but I will say that we are very happy to partner with all of these organizations, because it does make us feel more comfortable coming into certain risks where we don't necessarily have the experience in the particular country or in the sector in that country that would make us feel comfortable. So I think that given that we're talking about all this week how much the need is for infrastructure, particularly in Africa, how big those projects are. There's really a lot of room for a lot of participants to be in those projects. And I think that not just private sector insurers, but also banks, investors, tend to feel better working with the types of organizations represented here for various reasons, because of the experience in the markets, because of the underwriting talent that they have in certain types of sectors, certain types of transactions, the formal relationships that they have with, for example, the governments, and the fact that they have this mission to to do the best to help the project go forward. So we know that if we're working with these organizations, that they're going to be sticking with the project, even if there are bumps in the road. And I think that there's a very important demonstration effect, too, for the private sector more broadly, talking again about the perception of risk that exists as we see these bankable projects successfully being concluded throughout the continent of Africa. That demonstrates to private sector entities that there really are very strong projects here, there's good success, and that's going to bring in more private sector involvement and eventually solely private sector in some areas, which will then give more room for the official agencies to do more things in more places. So I think it really is a positive all around.
Thank you very much. I totally agree. Crowding in, I think, is the case. It's often capacity building so that you can then face the banks as opposed to face the development banks in the next stage of that country's development. So, Heike, thank you for waiting 36 minutes. I'm looking forward to hearing from EBRD. Obviously, you were on the continent, you're expanding here. What instruments and structures do you think that EBRD and other MDBs should deploy to ensure the additionality of the interaction that they have with private sector counterparties and ECAs and really evidence that crowding in part of it?
No, thank you very much. And I think it's actually great to come last because so many things have already been said and it shows, that we're thinking alike by other participants. So I'm Heike Harmgart. I'm lucky to be EBRD's very first managing director for Sub-Saharan Africa. I'm already on the continent because I used to run our Middle East North Africa business out of Cairo, but it's great that we're going south to 6 new countries that are becoming shareholders of the EBRD. And it's been clear also when we entered North Africa that it's all about starting with partners. So I think I couldn't thank the African Development Bank more by actually already 5 years ago thinking about how we can work more together. We did an MOU. We are doing deep dives every year and sort of financing projects together. So I think, and I think we've probably worked with all of the institutions on this panel. So I think that's quite exciting, and we're planning to do more of this. But one additional advantage of coming last is actually that I loved the go to the doctor early metaphor, and it made me think, usually it's the doctor then tells you different things. So they tell you, oh, the nutritionist, you should really eat better. And so that made me think, okay, actually it's also about what kinds of liquidity you provide. It's not just carbs or no carbs. No, you need to have local currency, you need to have the right type of liquidity. You really need to think about a project also from a sort of very holistic health aspect. And I think this country, Morocco, we've actually shown that we do local currency infrastructure investments. We can do local currency bond issuance using the capital market. We do green cities like Agadir or Guelmin, which really showcase that also cities can borrow without sovereign guarantee. So it's really about learning how to eat properly. And then I guess usually they tell you, oh, you should do more sports, really do more sports otherwise. So I also thought, about really that sport is a very competitive entity. So sometimes it's good that we're all coming together and learning from each other be it in a spinning class, what we can do better to really work faster together. So I think I also thought about trying to find instruments that are easier deployable. I like also what Sacha is doing in terms of becoming more innovative and flexible in their approach. And also areas of how we can crowd in all the different types of players in a sports metaphor. And then maybe sort of really torturing this metaphor one more time before I go to one example of where we work together bringing all of this. I think everyone tells you should sleep better. And so, here we really need the insurers because otherwise, no one wants to think about the bad outcomes. So I think, in order for us to all sleep better, we really need insurance products as part of the package. But so I want to conclude by giving one example where I feel I'm particularly proud of because it also showed that it's important to have a local team on the ground is basically the SCATEC renewable bond placement because it really ticks a lot of the boxes. It started off with an investment by a number of DFIs in a pretty regular but the first solar project in Benban in Egypt. that closed nicely, constructed nicely, had very little issues, and then it also showed, let's think more creatively, let's move to the next level of the spinning class. How can we now actually help these private developers attract more private capital in a capital market transactions? And so together with a lot of partners on this panel and others in the room, we structured an instrument that had a tranche for a bond that was for private investor, and then a tranche that DFIs could come in under different conditions. And actually on the private sector side, we realized MEGA alone is not enough for this structure. It was also a time in Egypt where there was convertibility risk, there were other risks. People were worried that PPAs get renegotiated. So actually EBRD also mobilized the credit enhancement facility for the first part of the tranche for the private investors coming into this bond, in case there is issues on the PPA, there are issues on convertibility. So basically, really bringing in new instruments that make private sector comfortable in the very first private green renewable bond, not just in Egypt, but North Africa, in this context, and then also having DFIs come into sort of the flexible tranche. And I think that shows we are all trying to crowd in the private sector because we don't have sufficient resources to invest in all the exciting infrastructure investments on the continent. And this is a sort of more sophisticated way and a secondary investment in the same solar plant. But it also enables Scatec now to go the extra mile on green hydrogen, other areas where this could be utilized. So I think it is really something about making things more tailored, more structured, zooming in. I share Michal's frustration with the generalization, and then also pulling all our collective strength into designing products that work, and so all feeling very healthy at the end. Thank you.
Wonderful. Thank you very much. Your doctor sounds like they cover a lot of things. And I'm glad the insurers help you sleep well at night. I don't know if Leela sleeps as well, taking the risk, but we can come back. So I'm going to sort of put a mandatory 2 minutes maximum on everybody now, because I feel like everyone's had a nice chance to have a chat, but actually what we want to do is try and create some sort of velocity within the panel. So Manuel, maybe if I come to you, I did promise, if I could just ask you to talk about maybe briefly some of the innovative instruments that a TD uses in the green infrastructure space to sort of expand that climate financing world. And I will stop you after 2 minutes.
Thank you for the early warning. Yes, indeed. I'll start by saying we've just come out of a COP 29, and the whole world understands, we all understand that we need to start to think of innovative ways of actually scaling up our whole push for renewable energies. So in ATD, we have taken that challenge out of COP, even the prior COPs, to say, what can we do to actually use our strengths, which is an insurer, hopefully giving investors some better sleep, but also tackling this very existential issue of climate change. So we looked at the repertoire of instruments that all my partners here are deploying, and there was one area that we discovered that we could actually do something about. Basically using the spirit of COP of blended finance, so bringing in donor money, blending it with private money to try and unlock solar projects. So our instrument is basically about the liquidity risk that investors talk about. I heard about a big project in Egypt, and I'm sure this risk is also there, where you say, okay, you've put in this 300, 400, even $1 billion project about solar, and you are supplying your power to the utility. And if you know, all our utilities in the continent are still, a bit weak. So investors then suddenly find themselves supplying power and not being paid. And when we look at ourselves, we say, okay, fine, let us see how we can take that risk off projects and enable those projects to happen. So we designed what we call the Regional Liquidity Support Facility, thanks to donor money that we got from the Germans, KfW, and recently from NORAD, the Norwegians, basically to say to investors, fine, if there is a delay in payment after you've supplied your power to the utility, we can cover you for up to 12 months of your invoices, so that at least you can still pay your bank, pay your investors, and we will then come and collect that money from the utility and from the government. So basically using insurance to make a project that would otherwise not happen. And indeed, this is actually happening in very frontier countries. So this regional liquidity facility, I believe, is a good model that we need to take back to the COPs, and say, listen, there's an instrument, it's working, we've deployed it in Burundi, frontier country. The first ever solar project was done thanks to this facility. And we've deployed it also in Malawi, first and second solar projects, again, trying to unlock solar projects in a country that you would otherwise call unbankable. And we want to develop it across the whole continent. We believe that way we are using our strength as a political risk insurer, enabling huge projects to happen. If you look at the leverage effect, we might even give the 12 months invoice might be, say, $5 million, but they are enabling a project worth $300 million to happen. So just look at the leverage of what we can do. So hopefully we can convince the world under COP to say, please scale up this instrument, scale up this tool. It can help to unlock those trillions that we are looking for. I'll stop here.
That was pretty good. Thank you very much, and great to hear about that product. It's obviously serving a significant need there. Right, let's talk about when things go wrong. President Terese, you mentioned that there have been issues in trade finance. There's obviously also issues at sovereign and at project level, which we've seen on the continent, and there are sometimes protractions in these restructurings which can cause pressure on the projects themselves and on the cash flows. Are there things that can be done at day one between the development banks with the PCT, the ECAs, the private sector, the insurers, the bilateral insurers, that can ensure that when and if something does go wrong, the process can be more expeditious? We can reach a restructuring, even at project level, that allows your patient capital to remain there and the project to succeed. Are there things that you think there? I'll also put it to Manuel and to Mikhail as well, but maybe President Terese, if you start.
Well, maybe I'll come in on the metaphor of doctors. I think we've heard that going to the doctor early is important, and I think the best thing you can do when the project needs special attention and care, you try to catch it early, of course, and you be constructive, and you find ways and means of ensuring it gets on track as early as possible. And so that means that you need to have the right constructive mindset. I think we had systemic issues affecting the entire industry with COVID. Almost every financial institution had to agree to reschedule, to reprofile, to restructure in some cases. And so, rather than pull the plug and throw a project into deeper distress, you have to be constructive about it. And so I think there's been many cases where we've done that as TDB, and we've nursed projects back to good health. And that's why Laila mentions in her remarks that they like to work with partners who are not just patient, but willing to pull up their sleeves and work things out, not just divert risk or pass the buck to others, right? And so I think this is what we're well known for in our particular segment of the industry, and that's why we've enjoyed very strong participation from the risk industry, right? The insurance companies have been very forthcoming with us. They step into the most frontier of markets with us because they know that they're with partners who really do understand the risk landscape, but find ways and means of managing things. I think credit needs to be given as well to the public agencies. We've seen the MIGA, for instance, has stepped into our market space in a way that we never have seen in the past. We've seen them come into the trade space. We've seen them come into syndicated loans, providing credit enhancements. We saw that in the Bern Union presentation about synergy And I think we really have seen a lot of synergy come through from, players that in the past didn't always see their right role in some of these opportunities, but we're seeing a whole lot more of that. And then, of course, innovation has other angles. I mean, we've heard about the climate agenda, and we've also said, look, green bonds, green loans have been out there in a big way. The other thing that can be done is to step into the green equity space. And so we came out with green shares, linked it to sustainability, and the African Development Bank and some European partners have stepped into that green equity space. That's allowed us to scale up, right, in that whole green financing environment, and not just with debt, but again, risk capital. And nowadays, there's also even more innovation coming. We're seeing portfolio guarantees coming in to support TDB to really scale up our innovations to expand renewable energy, not just the generic ones, but the mini grids, the off grids, the new business models, the new technology that's being applied in that renewable space. That requires, again, risk sharing, right? Because there's only so much a particular institution can take. And so there's very good developments, I find, in the industry. We are innovating, we are leveraging in ways that we've not in the past. But I think the wider stakeholder community needs to stay abreast of this sort of innovation and not be too conventional when some innovations don't meet the typical standards, right? So crowding in the private sector can have many different faces. MDBs are doing it with hybrid capital these days. It took a long time to get there. Private sector's been using hybrid capital for decades. Tier 2 capital is so well known. Only now the international community has accepted hybrid capital for MDBs. We as TDB started to introduce deeply subordinated debt, a form of Tier 2. And sometimes you're celebrated, and other times some stakeholders say, you've gone too far with the private sector. You need to pull back, and that's happened to us in some cases too. So I think to encourage innovation, we also have to be reform-minded and not too rigid about standards that don't always make sense.
No, thank you. Yeah, that sounds like the rating agencies probably also needed to get there eventually, didn't they? Okay, rather than continue down there, we've got a number of people with a number of things still to say, I think, from my initial briefings. Maybe I'll start at the far end with Haytham, and maybe you can talk to us again, as briefly as possible, but with as much detail as you can fit in, about some of the more innovative ways that Afrexim have unlocked some private capital for their financing structures.
Okay, thank you. So actually this sits well with the second concept I said after going to the doctor earlier, which we need a much stronger matchmaking mindset. Much stronger mindset meaning the suitors, the funders need to adjust their conditions to see the context of Africa, but also we need to find a way for the projects to appeal more, fit more to the investors. And for this we've innovated a lot. For example, we launched the REPAC program. We already sold to investors around $2 billion under this in the last couple of years. We're basically taking the African risk, repackage it, put wrappers around it of guarantees, investment grade, insurance. Now actually experimenting to put some ECA component on it to appeal to other investors. And it fits nicely into what investors' appetite to Africa look like. And we're very active in this, and it's an interesting solution to do the perfect matching to what designing for investors kind of things. The other thing, we did a lot of blended finance, where between us, ECAs, the commercial tranche, how can we work together to look at the project and cut it into pieces where everybody will take the piece. And the other thing that, and I'm wary of time, so just give a few examples, the de-risking piece, where we on lending, where they take our risk, we take Africa risk, we work together, or lending together, or providing guarantee. So there's a lot, and even sometimes we tackle some embedded project risk that is outside of the project, like the off-taker payment risk. A lot of the things that people would like to see really wrapped when they look at the risk. Because what we usually see, the projects is interesting from the project perspective, but maybe they have an issue on the risk of the country or the overall risk. This is where we can sit and find a way a lot of structure now is going between us, multinational banks, and the ECAs and the EXIMs of the world and the funders, because each one play a very nice role, and one has a better price funding, one can cover the Africa risk us, and one have the appetite to give concessional and more funding to this project. So there's a lot of innovation, and this is back to the original point. Come early to discuss how can we really put your project on the right form to appeal to the right suitors. Coming late and trying after you went around and found that your project's expensive, you cannot find the right funding, and trying to fit it to a frame where it appeals to a proper funding. This might be too late, too difficult, and you might waste a lot of interesting opportunities you have done if you flipped it and came early to co-design with your multilateral bankers or ACA. So thank you.
Thank you very much. And Mikhail, I know you would like to talk about untied push programs, so feel free to give us 2.5 minutes on it.
Thank you very much. Actually, as an integration to the very first part, I feel a bit guilty being the only ECA on the panel that I didn't mention that the traditional products, and I'm looking at my president of the Bern Union, that was very clear in his presentation, co-guarantees and reinsurance between ECAs is very much alive and very much necessary for the very large multi-sourced financing. So having said that, and we are sticking to all those extremely important strategic projects in Africa, I'm moving on now to the innovation. And here I want to say, back to the doctor. When you get the instrument right, you don't need to go to the doctor. So we're not thinking about, prescriptions, because we're thinking about tailoring the right product. I think we hit a good chord with the push strategy, the untied financing. From its inception back in 2018, roughly, until today, there hasn't been one failure, one default. So again, we don't need the doctor when the projects are structured in a certain manner. Having said that, just to explain to you how much of an impact this has had on our support to Italian companies, but also our support to investors overseas, and I would like to contextualize the African example. If we look back at a decade, so in the year 2014, our exposure in Africa was approximately 2.2 billion euro. Nowadays, today, 2024, right now, we stand at 15 billion euro. This is a 7-fold increase, and I want to say largely, in a very large way, it is due to the introduction of the untied finance. This is really the essence of being proactive, because we are focusing on the real needs, and it includes private sector, but also public sector, as I mentioned before. There are variations that I was hearing before about Islamic finance. So we have an Islamic finance push. We could do untied also using Sukuk rules. Another one that has been introduced last year, and we are really pushing hard for that, is the green push and the ESG push. So we have here untied that has either sustainability-linked loan parameters or pure green, which is totally flexible. It's best effort basis, and it is for general purpose. But in the case of a green push, a pure green push, we are looking at companies that have at least 90% of the revenue in the green sectors. And then it's up to them. What they do with the financing is totally up to them. Now, we're not a finance, we're not a direct financer. So in this case, we're bringing in all the banks, and the banks are, brought in together as a club by ourselves. There is no onus on the sponsor to search. And we involved in a very big extent also the local banks and the multilaterals. And this, again, gives you a club of, if you want, vested interest type, investors. They don't want to see the project go bad, and they are there to stay for the duration of the project. So it's been really a shift in approach. Proactiveness is, for us, the name of the game, And to add a little detail on the smaller projects, because these are largely 50 million up to 1 billion, sometimes even further. Today, we have 600 million just in Africa for this year, new commitments. By the end of December, which is why I have to rush back to Italy, because we're really working hard to close another 2 major push deals. We're going to have just in 4 countries, 1 billion euro of push products, new ones in Africa for this year. And we're going to close the year, I hope, I'm not jinxing it, but north of 11 billion push just for the year 2024. And this leads also to, the participation of, companies like yourself, private sector, they're welcome to come in. Other companies are welcome to come in. Clearly, multilaterals, we've already mentioned. So the smaller projects, this is the final word, anything up to 50 million, it's all done by now by SACE. It's the 2nd year, and it's working very well, all digitally.
Great, thank you. Heike, you got to speak last, and you can close off the panel, I think. Do you have anything else to say about any other financing structures that EBRD have used or are looking at with respect to, well, I guess your experience in North Africa and what will happen as you move further south?
No, thank you. And maybe just to add, I think, is using more capital market instruments. Maybe I want to close on that, because I feel a lot of the things that have been said, particularly on the green agenda, are also relevant for capital market instruments. So we just also anchored for Arab African International Bank the first green capital bond with 100 million for really scaling up instruments. So because I think this will help both the intermediary, but also the whole structure of the market to develop innovative instruments for green. So I think looking at municipal bonds, municipal green bonds, but also sustainability-linked bonds. So I mean, I just wanted to say sort of this is a continent which also is more mobilizing pension funds, is mobilizing institutional investors, and sort of the capital markets and bond structures could be really a good way forward. And I think that's maybe an area where we all can scale up and further include private sector investments into this asset class. Thank you.
Wonderful. Well, I think that's enough of us. I hope you've enjoyed it. If you'd be grateful if you would show your appreciation for the wonderful panelists, and enjoy your afternoon.